Hey, while many industries are still on the rebound from the effects of the pandemic, one type of business was pretty quick to rebound, and that's real estate and home sales.
That's right. Home sales and purchases bounced back quickly, and historically low interest rates fueled that growth. Hall Financial is a great place to start if you're considering a sale or a move.
That's true.
President and CEO David Hall joins us this morning to share more. Good morning. Thanks so much for being here with us.
Hey, good morning, and thank you for having me. And happy International Women's Day for sure. My mom and my wife, two of the greatest influences in my life, make it a great day for me.
Well put, well put. Can you tell us what drives, I mean, you're the president, you're the CEO. Are you the driving force behind Hall Financial? What really drives you guys?
Well, we have a great team, and I'm a part of that team. But I would say this is that, putting a company together that can deliver on the kind of service levels and the 5-star reviews that we aspire to deliver on is really tough. So over the last 5 years, we've hired and trained and gotten the right people in the mix. And really, there's two things about our company that I feel really proud of. And one is the majority of our loans being ready to close in 9 business days or less, and nearly 3,000 people now that have gone online to give us a 5-star review. Because we always say we're not in the mortgage business, we're in the client service business. We just happen to be doing mortgages because our guiding light has got to be, how do our clients feel about their experience with us? Because that's going to lead to repeat business, referral business, and all the things that we aspire to do. Because typically, as you probably know, getting a mortgage is about as much fun as going to the dentist. Nobody really looks forward to getting a mortgage. So we try to make the experience short and as nice as possible in terms of the service they receive. And the fact that we have nearly 3,000 people that have gone online to give us a 5-star review is pretty incredible.
It really is. Those 5-star reviews do a lot for your business. So you're in the client service business, and we kind of get the feel for exactly what that means. So if you want a positive experience as the driving force behind going through that process, well, Hall's the place to go. But let's talk about equity.
Yeah.
I mean, so many are my next door neighbors. They did a refi. I mean, people are pulling equity out of their homes. Is now a good time to do that?
Well, right, yeah. So great question, and you're right on topic. Equity in terms of what people have in their home is today at an all-time high. People have never had more equity in their home than they do today. That's because of rising home values over the last few years that have been pretty incredible. So if you've thought about wanting to utilize, because that's your money, and for a lot of people, they just want to keep it there for their rainy day fund in terms of having equity in their home, which is a good idea. There are other folks that maybe want to pay off some credit cards. Maybe they want to do some home renovations. They want to spruce up the bathroom. People are spending more time at home now than ever. So when it comes to doing home renovations, it's very popular because of the amount of time that people are spending in their home. So tapping into your home's equity, not only is it a great time because of the equity you have in your home, but because of these historically low mortgage interest rates that you're able to take advantage of due to the market conditions. So it's sort of the perfect storm for anybody out there to think about refinancing. The other thing I would also toss in is because rates are so low, people are shortening their term. Maybe they have 24 years to go and they want to go on a 20-year or a 15-year. And because rates are so low, their payment really isn't that much different, and they're cutting years off. So a lot of reasons to look at your mortgage debt right now and make sure it's being managed properly.
And really quickly, I'm at full disclosure, 3.625. Thought I had a pretty good rate. Now, should I think about it? What number should I be looking at to think about a refi?
You definitely should be thinking about it. And there are a number of factors that go into if it makes sense for you. So is there anything you want to do with your equity? Yes or no? How long are you going to live in your house? Because that's going to tell you whether or not you potentially would even pay points to buy the rate down if you're going to be there a long time. So we do an individual analysis for everybody that comes to our company, and it's very consultative. When people call, spend 15, 20 minutes on the phone figuring out your situation, because your situation and your neighbor's situation may be very different in terms of what's your credit score, how long are you going to be in the house, do you need any extra cash? But definitely people that are 3.5 or above need to look at it right now And I would say that 80% of the time, it's going to make sense to do something.
And real quickly, to get that process moving along, I know there's some things on our end that we need to have in place to help you guys get those closings happening in 9 days. So real quickly, in a nutshell, what kinds of things should we have ready to present to you to make this move along?
Yeah, well, and that's individual as well, depending on what our automated system tells us. But generally speaking, a pay stub, a bank statement, and a W-2 are the things that you want to have ready. We don't always need all those things. Again, the strength of the file, meaning your individual situation, if you have great credit and a lot of equity, we might need less documents from you. If your situation's a little bit more complicated, we might need a few more documents. But generally speaking, it's just a pay stub, a bank statement, and a W-2 that you need to have prepared. And oftentimes it's less documentation than that. I'll tell you this also that people will find interesting. Over 2/3 of the loans that we're doing right now, due to our technology and our expertise, don't need an appraisal. So there are appraisal waivers because of the equity situation in a lot of these homes on 2 out of 3 loans that we do. So only 1 out of 3 loans need an appraisal. That's another reason we've been able to cut the time period down to 9 days. And we're doing a lot of really good loans for a lot of good people and saving a lot of money.
That sounds good. I mean, that's really one of those things that has been keeping me from considering it, is that appraisal process. Hey, you want a free 5-minute checkup, get a mortgage review? You can do that at callhallfirst.com. That's callhallfirst.com. David, thank you so much for the time this morning.
Thank you.
Love the show. Thanks, guys.